You didn't mean to be a landlord. Sometimes it just happens. Maybe it was a home that you grew up in, or maybe it's a multifamily building that was inherited to you by a parent or relative. It all boils down to one choice. Do you want the quick payout of selling it, or the long-term adventure and responsibility of keeping it as a rental? Life is like Monopoly, every move counts. I'm Gia Silva, real estate broker and investor, and I've helped hundreds of people make winning real estate moves that are smart for them. Today, let's talk about a situation that I see more often than you'd think: inheriting a property that you didn't plan for. And with it comes a major decision: sell it or keep it and step into the role of a landlord. Let's break down what you need to consider before making this big decision. When you inherit a property, you get what's called a step-up basis. That means the value for tax purposes resets to today's market value. So if you sell fairly quickly, your capital gains tax could be little to none. But here's the kicker: California's Prop 19. If the home isn't your primary residence, property taxes will be reassessed to full market value. Translation: tax bill could skyrocket. For example, you inherit your parents' home and they're currently paying taxes based on when they purchased the property in the 80s. Let's say that they've been paying only a couple $1,000s a year. But now with the reassessment, your new tax bill is going to be based on what the property could sell for today, not what your parents bought it for in the 80s. For most people, that makes selling definitely more appealing because it's a clean exit before those higher taxes become a burden. Now, if the property was your parents' primary residence, the rules shift a bit under California's Prop 19. To keep their lower property tax base, you'd need to move in and make it your primary residence within a year of inheriting the property. Even then, only up to $1 million of the value above the original tax base is excluded from the reassessment. The rest is taxed at today's market value. Now, if you are considering keeping the property as a rental, the first question is, will this property actually cash flow? Once you factor in the new property tax bill under Prop 19, plus insurance, maintenance, and maybe a property management company, does the rent cover the cost and still leave you with profit? If it does, being a landlord could be a powerful wealth builder. Tenants help pay down the mortgage, the property will appreciate over time, and you get some sweet tax deductions for things like repairs, depreciation, and interest. You'll either need time and energy to handle tenants and upkeep yourself, or you'll pay a property manager to take that on. And remember, when you eventually sell after years of renting it, depreciation gets recaptured, which means you'll pay more in taxes on the gain than if you would have sold right away. Here's the truth: there's no one-size-fits-all answer. Selling it can give you freedom and cash now, or keeping it can give you wealth and long-term income. But Prop 19, capital gains, cash flow, and lifestyle are definitely factors to keep in mind. The key is asking yourself, does this property fit into my bigger financial picture, or is it a chapter I'm ready to close? If you're currently in a situation where you've inherited your family home or perhaps some investment property from a parent or relative, make sure that you are speaking to the right partners so that you can make the best decisions for yourself. Make sure you're speaking to your CPA, financial advisor, attorney, tax attorney, estate attorney, and of course, your realtor. If you have any questions for me or would like to discuss your specific scenario, make sure that you contact me at the information below. If you found this video enjoyable, make sure to like, comment, and subscribe. I'll see you next time.